What's up, everybody? Hope you guys are doing great. We are going to do our options trade of the week. We looked at one last week. We're going to do it again this week and try to find a good trading opportunity for you that are more of the swing trading mentality. Now, the idea here is that we're looking for something that's going to give us an opportunity to trade with the existing big picture market trend. And as the big picture market trend last week showed us a bit more weakness, we're going to continue on that route. So today we're looking at Southern Copper. Now, Southern Copper, we'll look at the chart here in a couple of minutes, but from a fundamental standpoint, a couple of things to pay attention to on Southern Copper. First of all, the fund ownership is going down. Less and less funds are owning Southern Copper. As of March of 2022, there were 583 funds that owned it. As of March of 2021, there were 672 funds that owned it. So funds are rolling out of Southern Copper. We've seen that it's gone from 672 to 630 to 593. Now, most recent measurement was 583 funds. So that's one thing. The other thing to take a look at is that Southern Copper, in the copper sector, we're seeing copper itself start to take a bit of a hit because from a fundamental standpoint, copper just is a metal that's going to grow when we are expanding an economy. And as our economy is really contracting, we're going to see, I think, this continue to move down. So we're going to slide over to the charts and take a look at Southern Copper. Okay, so here is a daily chart of Southern Copper. We can see on Friday that we actually got a pretty good reversal candlestick pattern here with a bit of a spinning top doji. Now, I kind of like this because this sets up for a potential island reversal to possibly draw price up a bit higher. Now, I'm okay if price goes up a bit higher, as I think that you've got a pretty decent area of resistance up here. As I put both of these levels up here, a pretty decent resistance area there at 63.29 by 64.15. So if price were to rally back up in here, I think you're going to see a couple of things. Number one, I think it gives you a really good entry for a small time frame move. The other thing that I like about this, and let me wrap my lines around this channel, is that when I look to the left, and let me change the color on this just because I think it works better if it's all in red. When I look to the left, I can see that this area has been hit on a number of occasions. Bounced off of it here, bounced off it here, touched it in here, bounced off it here, bounced off of it here, bounced in there. And so this becomes a true fair price value area for a potential reversal, so on some sort of a rally up. Now, the other thing that I would consider is that if we rally up, I would anticipate seeing that our volatility would drop back into the lower third. We have seen that volatility has been in the lower third recently, which makes our option buying a pretty simple strategy. We are just going to be looking at a long put in today's setup. So moving over to my what if tab, if I want to analyze it, I'm going to add an options trade. And I'm going to go out, in this case, to, I've got all the way out to January, but I'm going to look at the September options. Now, when I go to the September options, I will say one thing to pay attention to is the open interest. Not all of the contracts have great open interest on this particular stock. And so when I look at the 60 put, I've got about 1,200 contracts of open interest. The bid is sitting at 5, the ask is sitting at 530, so my spread is pretty good. We got the mid at 515. So if I were to buy that particular option, what it would tell me is that my risk graph on this position would be pretty clean, right? Losing money when we start to go up, making money as we begin to go down. And as I play this through, you will see how our risk graph plays out. The price of the stock is dropping as our P&L continues to go up. Now, what I'm going to do on here is I'm going to change this quantity to, say, 10 contracts, right? So that we've got an amount in there. Because what's great about this, it's a fairly low-cost option at this point. And so if we look at this, where's a decent possibility for where this price may go? Well, moving over to a weekly chart, and let me go back a number of weeks. Looking over at a weekly chart, I think it's a realistic possibility that our price can make it down to 50. I think 50 is a very realistic possibility for more of a swing trade. And so when I look at a price of around 50, right now I'm looking at August 16th. I'm giving myself a couple of months. But if the price of the stock gets to somewhere around 50, my P&L on this is about $162 per contract. So $162 per contract is my P&L on August the 16th. Now, if it gets there before that, on say like right away, it's 353. That's the effective theta that we see on there. I've got a decent P&L of 162. Now, what if I'm wrong? Well, if I'm wrong on this position, we would have our stop located just above where our entry point would be. And in this case, our entry point would be this area right here. Our stop would have to go above this region, so at about 65. So our stop would be at about 65. And with a stop at about 65, our P&L says, hey, look at this, we're losing $400. Now, that's a backwards P&L, you might say. Well, why would you risk 400 to make 162? Well, in this case, we wouldn't, because this is showing the P&L with price as it is today. That P&L will look very differently when price rallies up into this region. Matter of fact, we've got about $3 worth of difference. And so I think you would see that P&L almost exactly flipped if we rally back up. So take a look at this as price rallies back up into this region. Look for a potential reversal and see if you can't find a really good entry. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya.